Hi guys, trust you're doing okay. This is David here from Suavally Market. Super excited to welcome you to the super smart start to financial market trading. I hope you're excited. I am personally very excited to join you on this journey. If you're new, this is a great place, great resource for you to start learning financial market trading. So let's just get started and get right to it. All right. So, guys, getting set to learn Forex. I have been teaching Forex for many years. I've helped a lot of traders get on to become traders and successful traders at that. Hence, I've come to understand why it's important to really shed a little bit of light on on expectations and the likes in your journey of actually getting started in the process of learning Forex. So that makes me touch on why really do you want to learn Forex. These are some reasons why a number of people highlight why they want to actually learn Forex, and I'm just going to run through a few of them, and I'm going to put a little comment and tell you whether or not this is a good mindset to have if you're getting started seeking to learn Forex. Now, if you're in the class of folks who think that Forex would make a good alternative source of income to your job or business, that's great. I think that the freedom, I think that's a good mindset to get started with. Just think about it in terms of an alternative source of income to your job or business, providing you increased flexibility. I absolutely love that. An avenue to become a millionaire in dollars, nah, not quite. I don't think that this is a healthy mindset that you should get started with. If you ask me, a lot of people who come in and actually go on to lose money, lose their capital, often come up with extremely high expectations, and usually what this causes is a lot of them over risk. They take excessive risk and take losses that ordinarily they wouldn't take if they were just doing the right thing. Okay, if it's starting to new opportunities, I absolutely think so. There's so many opportunities that you will get to find out in your trading, in your journey of Forex, that you had absolutely no idea. So many branch outs of what your skill as a trader could give you. And in fact, as a matter of fact, you could literally set up different companies within this industry and with the knowledge that you're actually seeking to have. So I absolutely think that this is a good way for you to view Forex as you come to learning. Expanding your knowledge about the world's financial markets, absolutely. I think this is a great mindset to have. Learn a lifelong skill for the future. Yes. I will expound on that a little bit more in the slides that are coming next. Again, managing expectations. Now, this is now the summary of what I just shared now. Understand that while you can make a lot of money, risk goes with reward. You need to keep your greed in check. It is normal for humans to be greedy when they feel like there's a lot of bounty on the table, and that's how a lot of people come to the market. So obviously, there's so much money to be made, but you really need to keep your greed in check. Next, you got to be patient through your learning process. Everything worthwhile requires patience. It's important for you to take it easy on yourself, take it step by step, and gradually grow into the trader that you desire, who can have the results that you desire. You learn a skill that can pay you for life. Work the effort to stick with it and learn through. You will improve as you practice. That is true for Forex as it is true for any other thing that you choose to do in life. It's important for you to give yourself time and get started. Now, guys, I'm going to talk about the magic hands. A bit of a joke here, but I think it's also very symbolic of what trading is about, and just the general way in which the world of trading is constructed. Think about this: you're given a superpower called the magic hands. So now with this superpower, you can literally lay your hands on any money, and it will increase over time. Men and women shall come to you because of what you can do. Think about that. You have a superpower. It's a magic hand. You can lay your hands on any money. That could be your money or your friend's money, relatives' money, strangers' money. You could lay your hands on any money and it will increase over time. That's your superpower. But you think about it. Then you have a clause for this magic hand. This magic hand says you must abide by certain rules. If you don't abide by these rules, you, rather than grow money over time, will lose money. Interesting, isn't it? I definitely think it is. It does make sense that if you recognize how important this superpower is to you, it does make sense that you will try your absolute best to ensure that under no circumstances whatsoever, in no situation or occasion, do you get to a point where you break those rules. All right, that, guys, is very symbolic of what trading is. You are given a power, literally, to grow money over time. However, there are rules, guys, and that's why you got to be patient as you learn through the process. Now let's get started, guys. Introduction to Forex. Now, guys, let's talk a little bit about the financial markets. A lot of folks think that when you talk Forex, you simply just mean Forex. When you talk about trading, you're simply referring to Forex. Now, listen, there is a financial market, and that's any market where financial market securities, instruments, or products are traded for profit. All right, and there are like different financial markets that have developed over time. You got the commodities market where commodities are traded. You got the foreign exchange market where foreign currencies are traded. You got the capital market, which is the stock and bonds market. You got the derivatives market. You got the futures market where forward future contracts are traded. You got the cryptocurrencies market, and then you got the spot market. Guys, in retail Forex, we have a bit of a merger of a few of these markets in a sense, because you could literally on the retail Forex side trade Forex, trade commodities. You can even trade shares, UK and US shares, on and on like that. Which brings us to what price really is. Now, amongst the totality of all that you see here, there's something that's common to them. It doesn't really matter what the product is. Okay, what's common is the product will have a price. Okay, and that price will change in time, and it's in that price change, that there's opportunity for a trader to make money. So now the instrument could be gotten from either any of those markets. As an example, you could get an instrument or product to be a currency, for example Euro USD, or a commodity, or metals like gold, silver, the likes, shares like IBM, Amazon, cryptos like Bitcoin, on and on like that. The movement of price produces volatility and creates opportunity for traders to profit. Ultimately, as a trader, your responsibility is determining the direction of price, okay, whether the price is going to go up over time or down over time. It really is that simple, guys. But hey, there's always a complexity behind the simplicity, and that's what we're going to hopefully be explaining as we go along here. All right, guys, so let's take a look at the approaches that traders tend to use to trade the financial market. There's three main approaches that traders tend to use to trade the financial market, and that's the technical, fundamental, and sentimental. I'm going to touch on these approaches very shortly, okay, with a traffic analogy. Now, guys, let us, as a trader, you are expected to essentially determine the future direction of price. Okay, you're not in the future, but you're expected, in order for you to make money, and that's the duty of traders, millions of traders all around the world. This is what we try to do, is to determine the flow, the direction, okay, of price before it actually happens. Now, with the traffic analogy, okay, I'm giving you an instance where you have a responsibility to determine a phenomena that's going to happen in future. Think about it. It's a Sunday night, and you were expected to determine whether or not there's going to be traffic on Monday. That's your job. That's what this little test is about. It's a Sunday night. You are expected to determine whether or not there be traffic on Monday. If you're in a metropolitan city, and that's what this is assuming that you're in, whether you're in Lagos or New York, wherever else it is that is highly metropolitan. You are required to just say, hey, there will be traffic or not. All right, now I'm going to share with you the analogy of analysis, how traders come to the conclusion of deciding a particular phenomenon will happen before it happens, and what informs the decision of traders that now breaks us down into technical and fundamental analysis as we go along. Now, if you were a technical analyst, or you were applying technical analysis, you can say something like, I know there will be traffic on Mondays because it's happened frequently before. Guys, think about this. You are probably at a date before Monday, maybe a Sunday. But here you can say, I know there will be traffic on Mondays because it's happened frequently before. Now, in technical analysis, what you've just done is you're utilizing previous price data. Okay, you're utilizing previous data, beg your pardon, not price in this analogy. You're utilizing previous data, and what does previous data talk about? It's that, hey, over the past period in which this analysis has been done, okay, you tend to find out that historically on Mondays there's usually traffic. You might not need to know why there's traffic, but hey, you just recognize there's usually traffic. Then again, you're looking at repetitive patterns, okay, that you've seen based on that previous price data. Okay, that's how you came to that decision. Then you're looking at, thirdly, you're looking at trends that often repeat themselves. That's technical analysis, guys. That's what technical analysts do. They look for patterns, they look at previous price charts, they look at data, they look at history, they look at trends to be able to say, hey, when price gets to this kind of setup, this is the next likely direction. Remember, I did share with you that earlier on that the ultimate job of a trader is to be able to determine whether or not price is going up or down. Moving on, guys, talking about fundamental analysis. How would the fundamental analyst look at predicting whether there will be traffic or not? The fundamental analyst will say stuff like, I know there will be traffic on Mondays because children go to school, adults go to work, there's a lot of commercial activity. Guys, notice the difference between the fundamental analyst and the technical analyst. The technical analyst is just referring to occurrences that repeat themselves. The fundamental analyst here is looking at the underlying factors that's causative, that's likely to be causative of that situation. So in actual trading environment, the fundamental analyst is analyzing underlying factors. If you're looking at currencies, for instance, the fundamental analyst is looking at social political factors, economic factors, all those factors that drive the behavior of price. All right. So, and by analyzing these factors, it can then come to a decision as to whether a particular product is set to rise or fall. Give you an example of what's going on right now. A fundamental analyst will tend to look at, as an example, who's interested in a pair that involves pounds, would look at the current situation with Brexit and be able to come up to a decision as to the direction of the price of the product. Now, he's not looking at necessarily at price charts. He's looking at social, political, economic factors as they drive price. Now, guys, this is very symbolic. I know a lot of people ask, which is better? Do I become a technical analyst? Do I become a fundamental analyst? Guys, I think it does make sense for you to be able to be capable of merging these things. Okay, understand repetitive price patterns, understand trends, but also have a sensible grasp of the social political factors that drive the behavior of the prices of a certain product. Okay, and that to a large extent is what sentimental analysis, kind of like a fusion in a sense, because it begins to allow you take the pulse of the market on account of the sentiment of the market, and either technical or fundamental factors could be driving this sentiment. I hope this helps you understand a bit more about technical and fundamental analysis. If you've got questions, you can always send an email. But let's move on a little bit more. Let's take a look at, guys, Who are the participants in the FX market? Guys, we've got the major banks, the Deutsche Bank, Bank of America, Barclays Bank, those kind of banks, the really top tier banks in the world. All right, they are the ones that typically drive the bulk of the volatility in the market. What do I mean by volatility? The price change. Okay, they are the ones that are causative of a lot of price changes that you see. Remember, guys, I did say that volatility equals opportunity in trading, because absence of volatility means that really, guys, we really can't make money. Then we look at electronic brokering services, routers dealing 3000 spot matching. Those guys are also key participants of the forex markets. Then we look at medium-sized and small banks that are smaller than the top tier banks. We look at the retail market maker, the retail ECN, and then lastly, guys, we got the retail trader, you and I, trading on our laptops and our phones in some corner of the world. All right, so the entirety of these guys, okay, are the ones that make up the FX markets and drive the volatility of the market. Guys, let's quickly get into currencies. A lot of what you're going to be trading within the FX market will be currency pairs. Okay, now what is a currency pair? I have spoken about products equating price. A currency pair is a financial market instrument, okay, that is made up of a base currency and a code currency and has a price, a unit price in time. What does that mean? What that means is that, yes, I have told you about instruments which tend to be based off of certain products in real life. I am saying to you now that you've got Euro USD as an example, as a cross pair between the euro and the dollar that makes up this currency pair. This currency pair will act like a product, much in the same way as you're gonna have a product in the market like tomatoes, for instance, having a singular price. Euro USD can act as a product like tomatoes, whose prices go up or down as a function of demand and supply and a few other factors in the market. Let's take a look at what the currency pairs are. Okay, guys, typically we have currency pairs that are majors, okay, which I'm going to be showing you here. Then we've got minors, and then we've got exotics. Okay, but I'm going to be showing you 7 of the most traded currency pairs in the world, all majors. Okay, and their nicknames within the trading community. So you have euro dollar, or euro USD, which is fondly called the euro. You have the pounds USD, which is fondly called the cable or sterling. You have the Aussie USD, which is fondly called the Aussie. You have the USD CHF, which is fondly called the Swizzy, the USD Swiss franc. You got the USD Canadian dollar, fondly called the loonie. USD Japanese yen, fondly called the dollar yen. The New Zealand USD, fondly called the kiwi. Guys, let's take a look at something that confuses a lot of traders in the market. Now, essentially, guys, every time you launch a trading platform, you're going to see 2 prices. Okay, they are the bid and the ask prices. The bid price, okay, is the price that your broker is going to be willing to buy or execute your buy orders. The ask price is the price your broker is going to be willing to execute your sell orders. All right. However, on the trader side, the reverse of that is what happens. The price at which, when you click on a buy, the price at which is you get is the ask price, and when you click on the sell, the price at which you get it, that particular product, is called the bid price. Now, guys, the only, if you ask me, significance of this is that the difference between the bid and the ask is actually the charge that your broker is going to take from you. It's kind of like a bank transactional cost when you do a transaction with the bank, whether that's on a current account or any other kind of account. So that's probably the key significance of this. That is known as the spread. Guys, it is important to note that I did discuss with you earlier about the currency types, majors, minors, and exotics. As you move from the majors, go to the minors, and then eventually to the exotic, the charges, okay, on placing trades, okay, or buying and selling of this instrument increase. And it is very easy for you to spot what the prices are. The spread is also, it also represents how much in negative you get started with every time you get into a trade. So whenever you enter into a trade, a lot of people are surprised that when they get into trades, they always see a negative first. Guys, that is the spread. So it goes on to say that if you get into a product with a high spread, the negative is going to be higher. You're going to have to work to overcome that, then become profitable. But it is important that, guys, you cannot really run away from this. It's just a charge of trading. Next, we go to PEEP, guys. What is PEEP? PEEP represents price interest point. It's the smallest measure of change in a currency pair. Let's take a simple example. If Euro USD, which is an instrument, should move from a price of 1.34510 to 1.34520, guys, we say Euro USD has moved by 10 points or 1 pip. It is important to note this, guys. 10 points or 1 pip. Okay, if you subtract the latter from the former, that's 1.34520 from 1.3510, okay, you will find that you actually have a change of 0.00010. Okay, and guys, what that means is that 0.0001 represent the smallest change in price for a lot of products. Okay, calculating pips is the very fundamental of Forex. It's very important for you to understand how this can be done. Again, I will repeat. When a price of a product moves from a particular level to another, in this example, it moves from 1.34510 to 1.34520. Okay, when you do the subtraction, you say it has moved 10 points. Note that in this example of points, we actually have the prices shown as 5 decimal points, 5 figures after the decimal point. Okay, some trading platforms will show this as 4 figures after the decimal point. What that would mean is that there really will be literally only the difference would only reflect the pip, not the points as well. Making progress, guys. Lot sizes. Lot size is very important. Now, if you want, there are 3 columns here. I've got the volume column, the notional value, and the profit per pip. Now, guys, when you use a volume of 0.01 lots, okay, the actual required amount, which is also known as the notional value that you should have, ideally to be able to place that trade, is 1,000. Okay, so if you're looking at that could be $1,000. What that means is that your average profit per pip, okay, that is per each unit move of price, will be 0.1, which is 10 cents. If you use a volume of 0.1, the notional value, okay, or the amount that you literally ideally should have without using leverage, okay, which is another feature I'm going to talk about, is $10,000. Now, per each pip, your profit would be what? $1. Lastly, guys, if you use a lot size of 1 lot, ideally, without using leverage, your notional value should be 100,000, which means that ideally you should have 100,000 in your account. Your profit per pip, okay, will be $10. Now let's take a quick look at the previous example here, okay, and try to determine, okay, and understand what it is, how we're explaining this. In this example, we had price move from 1.34510 to 1.34520, and we said there's been a 1 pip movement because there's been a 0.0001 change in this price. Okay, Now, let us assume that we had, as an example, okay, let us assume that we had an account balance of $500. Okay, I'm going to assume that I had $500 here as an account balance. Okay, something I started with. Okay, guys, I hope you're following me with this. Let us assume I had $500. Now, when price moved from here to here, okay, I would have gotten 1 pip. Now, in the instance where I use one standard lot, okay, as shown from the previous slide I just showed you, one lot will cause a change of $10, okay, and this is true for like a lot of currencies. Okay, not every single currency, but this is a good estimation at this point. As you move from currencies, move to commodities and metals, you find that this is higher, but this is a good estimation at this point. Think about this, guys. If you trade with one lot, okay, when you have 1 pip, it means that you're gonna have a profit of 1 times $10, and in this example, that would mean that your new balance will be what? $500. I hope you understand this, because for one lot of trading, the profit this is a mistake. Now this is $510. This will be your new balance. Okay, for one lot of trading, all right, your profit per pip is $10. Let's go back here so that you understand again. You remember what I said. For one lot of trading, the profit per pip is $10. So if you had a balance of $500 before, okay, and you had a movement of price, okay, as shown in the previous slide, you are going to get plus $10 for that. So I think it's rather obvious that, guys, I feel it's rather obvious that you can see here that your profit is actually a function of the lot size that you use and the pips that you get to be able to accumulate. In this same example, if you had used a lower lot size, which gives a profit per pip of $1, then, guys, rather than having $510, okay, you're gonna have $501 because you only get $1 per pip movement. Now, I was talking earlier about the notional value. The notional value here, this column here, okay, talks about what you can actually expect to be able to trade, which of the lot sizes you can trade, okay, with the kind of amount, the amount you actually need to have in your account before you're able to trade the corresponding lot size. In this example, you actually would need up to $1,000 to be able to trade a lot size of 0.01, which gives you 10 cents per pip movement, or 0.1. Okay, that'd be a bit boring for a lot of people. And one of the most interesting thing that retail forex has done is to have what we call leverage. Okay, leverage. What that means is that you can increase your trading power. Okay, you can increase your trading power without necessarily increasing your equity. Okay, I'll give you an example. Let us say, for instance, I wanted to access a trade that had up to $10, and it shows here that I need a minimum of $100,000, but I don't have $100,000. Let's say all I have is $1,000. I could get a leverage of 1 to 500 from my broker, and that gives me the ability to multiply my trading power, not my equity, okay, but multiply my trading power by 500 times, which gets me to be at 500,000 in terms of trading power. That's what we call leverage, guys. Some of you who have questions about that, you will find out a bit more about it as I go through the classes. But with $500,000, okay, if I take a leverage from my broker of 1 to 500, what that means is that I will now be able to trade as much as 5 lots. Okay, because 100,000 per one lot, 500,000 for 5 lots, which will give me an average profit per pip of $50. So the whole idea, guys, of leverage, okay, which I'll talk a bit more about later on, is that it allows you to be able to access increased trade power. Moving on, guys, let's look at how do you calculate profit. Now, I have already said that when you have a lot size of 1.0, it gives you an average profit per pip of $10. But let's see how that actually happens. Let's give an example. You have a currency pair, pounds dollar, at this price of 1.52031. What this actually means is that one GP, baby, okay, one British pounds equates 1.5230 USD. That's what it means. Now, if you use one lot, okay, remember, if you didn't have leverage, you're going to need to have up to 100,000 pounds in your account. But of course, with leverage, you can use much lower amount to access this trade size. But let's say you kind of found a way to have one lot. By buying one lot, what you got is you have 100,000 pounds, which equates 152,031 USD at this current exchange rate. Price moves to 1.52041. What that means is that your one lot now at 100,000 pounds is now worth 152,041 USD. What is your profit, guys? Your profit is the difference between what your one lot could buy at the beginning and what your one lot can now buy at the current price. So the profit is going to be 152,041 USD minus 152,031 USD, which gives us what? 10 USD. And that confirms that our profit per pip is, for one pip, is $10 as shown. Note that if you look at it, price actually moved from 1.052031 to 1.52041, which is still one pip. All right, that's how you calculate profit, guys. Moving on, let's talk a bit more about margin. Okay, your margin is any amount required to keep a trade open. To cut it simple, guys, your margin is the amount that you must have, whether you're having leverage or whatever, the total amount that you actually need, okay, to have, whether you're including leverage in this picture, in order to be able to access a particular trade size. Moving on, as an example, if you were given a leverage of 1 to 100,000 by a broker, you wish to trade one lot, instead of having to provide the full 100,000 euro, I already spoke about this, you will only need 100,000 euro divided by 1,000, which will be 100 euros. So with a leverage of 1 to 1,000, you are able to access the same trade size as if you had up to 100,000 for just 100 euros. And okay, a lot of people, their account sizes are actually in dollars. So let's see if you had an euro USD exchange rate at 1.12340, 100 euros would now equate 100 times this exchange rate, which would mean that you would need this amount in your account to be able to access a one lot trade. Just a quick reminder, guys, for you to access a one lot trade means that you can actually get $10 per peak movement. Guys, if you got questions, you can always send an email and then we can proceed a bit further. Okay, guys, I'm going to talk shortly about the MT4 and the MT5. Now, guys, the MT4 and MT5 is a software that practically all brokers provide that allows you to access certain features. It will give you access to the market watch that will show you all of the products that you can trade, and to give you access to the price chart that will allow you to be able to do technical analysis. It will also give you access to windows that allow you to be able to place trades. Okay, I'm going to send you steps to download the MT4. I'm going to send you the relevant link for you to be able to download the MT4. Okay, so once you've done that, We're going to work with you on a demo account later on. Now, guys, once you've selected a broker to utilize, you'll be able to log in to an account. All right. So once you've downloaded the file, you're gonna have there's an option. Once you've downloaded the MetaTrader, again through the instructions that we'll send alongside this this webinar and this video, you're gonna see a place for file. Then right after the place for file, you go to login. Okay. Then after that, you're gonna have a shooter bar that now allows you to input the access details of that account and get access to the account. Guys, I'm going to take you through a very short explanation of one way in which we could use technical analysis to determine the direction of price, either on the upside or on the downside. And this brings us to what we talk about when we talk about technical analysis, utilizing previous prices, okay, to be able to forecast future prices. Now, one of the tools that we can use, very commonly used, is moving average. The moving average shows the mean period, okay, mean price value for certain period. There are different types of moving averages. And I'm going to show you how to plot that later on. I'm going to send you an informational that guides you on how you can plot the moving averages on your chart, and get to see it as I will be showing it to you. The different types of moving averages: there's a simple moving average, there's the exponential moving average, the smooth moving average, and lastly the linear weighted moving average. Guys, I'm not going to bore you too much about the details of what constitutes these moving averages. You would find it in further a more elaborate detail in the courses as you go along. But I'm just going to show you a bit of how you can actually use moving averages to generate directions for a chart. Let's take a look at a simple trading strategy. You can use this on the pounds USD, and the time frames, I'm going to talk in more detail later on about time frames, is the 1 hour, 4 hours, and the daily. And the indicator to use, I just made a very short introduction to indicators, is the linear weighted moving average, guys. Now, I'm going to share with you descriptions for buy and sell. Okay, this summarizes how strategies are built and how strategies are communicated. Okay, so you begin to get an actual feel of what trading is about. If you want to sell using a signal, and remember, guys, when we actually when we have a setup for price to rise, we buy. Okay, and when we have a setup for prices to fall, we sell. This is just a general rule of thumb, and I'm going to share in actual market environment how it is that this plays out. But for you to be able to determine whether to use this or this, okay, you've got to analyze. You've got to use a tool. You've got to use a strategy, which is one simple one that we're sharing here. How do you know that the price of euro dollar, the price of that next commodity like gold, like crude oil? How do you know the price of the next metal like gold, silver? How do you know the price of that particular instrument is ready to go up or down, or you can buy or sell? There's a simple strategy that you can use for that. All right, and this introduces you into the concept of how you utilize strategies. Again, you're going to learn how. I'll put in the instruction of how you're going to get with plotting out this linear with the moving average on the chart. Once you've done that, guys, you'd notice a red line, okay, or whatever color, and this, guys, represents the moving average, guys, the moving average. Okay, that's what this represents. Now, a simple way in which you're going to need to understand, so you can begin to understand what technical analysis is about and how you can use indicators and the likes to signal market entry, is take a look at this, guys. When price falls, this is price. It doesn't matter what the product is. I already told you, you can use this strategy for pounds, dollar. You can always find pounds, dollar on the chart. You can just plop it up and you can use it on the time frames that we recommended. When price falls below this moving average, Okay, what happens, guys? Interpreting it, when price moves below the MA, it becomes what? A downtrend or a sell signal. Okay, and guys, as I explained to you, when you find a sell signal or when price is set to fall, you should be looking to sell. Okay, that's what you should be looking to do. When you see price is set to fall, you should be looking to sell. Okay, now what about in this example? The price moves above on the upside. Look at the moving average here, price moving above it. If you find a signal like this, okay, you should know the price from this indicator is looking to rise, which gives a buy signal. Guys, are you following me? It gives a buy signal, and that's what the interpretation is. And this is probably one of the most simple and basic analogies of how you can use indicators. These indicators, guys, now come up on the chart and begin to give you signals of you, kind of giving you information about whether price is rising or falling. Moving a bit more into the utilization of moving averages. Imagine you could use two or more moving averages. We say one is fast and one is slow. Now the signal generated now differs slightly from where we started out. This time around, we're looking at the crosses between the fast and the slow. A simple use is when the fast moving average moves above the slow moving average, we have a buy signal. And then when the fast moving average moves below the slow moving average, you have a sell signal. That's to say, if you see a setup like this, it signals you, okay, a price to rise, and then you're looking to buy. When you see a setup like this, it signals the price is set to fall and you're looking to sell. Let's look at the graphical illustration of that. Here we have the fast moving average and the slow moving average. Guys, just a few instructions here. I will, again, like I told you, show you how you can plot the steps that you can use to plot the fast moving average. Okay, at the fast moving average, the settings are the 10 EMA. Okay, I'm going to show you how to get that such that when you plot it up on your chart, you can see exactly what is being displayed here. While the slow, okay, these are just basic settings for this two moving averages. Okay, the slow is what? The 20. Hope you guys are following me now. Something really basic. I believe that everybody can follow through with this before we start getting into things that are a bit more complex than this, but you can begin to generate trading signals with this. So I'm going to show you how to plot these two, this red and this color. So once you have it, forget about plotting it for a second. Just understand how it is that it can be used. Whenever you see that this shorter term moving average, okay, which is the 10 EMA moving average, okay, moves above, look, notice how, guys, this red moves above the other color, the whitish. That generates from this point a signal that from here this price is set to rise, and that generates a buy signal, guys, as we shared here. Now let's look at the other scenario. Again, the red moving average, which signifies the 10 exponential moving average that I told you I'm going to show you how. When it moves down, it signals a sell. Okay, so you should be getting ready to sell this pair. These are very simple ways in which you can get behind all the craziness and actually begin to understand how you can take opportunity within this. All right, guys, this represents the basics of what I feel like you can get started with. Again, in addition to this, as I told you earlier, I'm going to send you how you can plot out the moving averages, how you can download the platform, all of what you need to get started and get to the point of actually placing buy and sell trades on this, inclusive of how you place your first trade. Talking about your pathway to success, guys, we have developed a very interesting course set that walks you through, okay, all of what we believe you require to become successful All of what probably the most comprehensive course that you're going to have out there, and this begins from an early trading campus, goes to an applied trading campus, and then moves beyond that to an advanced trading campus that kind of walks you through all of what you need. Now I'm going to walk you through the white paper of all of what you need. Okay, just show you what each of those course contents actually do look like. All right, I'm going to walk you through that. Okay, guys, about the courses. So I'm just going to walk you through all of the schools that we have, and this is representative of the white paper for all of what we're looking to share with you. So you can walk through this a little bit. So we're looking at getting started. If you're absolutely new to Forex, the Suavally Early School will actually get you all that you need to know about Forex. You're going to look at getting ready to learn Forex, developing the right expectations, risk and reward, the magic hand theories that I shared earlier, responsibilities and actual responsibilities in this time around, what you need to know. Now we move to introduction to financial markets. What are the financial market? The place of price, risk correlation with reward, and quite a lot of stuff, guys. We offer a basic introduction and analogy for technical and fundamental analysis. We look at the FX market participants, some of the stuff that we started out sharing here, but we go in detail to explain that. We go in detail to explain the functions of the trading platform. Really couldn't get into that here. The features of the trading platform, setting up an account, downloading login steps, functions of various windows, using the platform to effect typical trades. Then, guys, we move into market analysis as we look into candlestick, trends and sideways price movements, simple custom trading strategies. We look at risk management, very key if you must actually do this, position sizing, using stop losses, exposure management, and partial closing. We'll end this course with our end notes on psychology. Next, guys, is our applied school, and we're just going to walk you through about what the white paper is for this. Getting started at the applied school, we're going to start out with a review of the earlier class, and then we'll move into support and resistance, uptrend and downtrend, conditions for trends, invalidation of trends. Then we move into candlestick and special candlesticks. We look at pin bars and signals, and quite a number of interesting, very useful candlestick patterns that I feel like every trader should have in their toolkit. Bullish and bearish harmony, engulfing bearish and bullish lines, 3 inside up and 3 inside now. Guys, all of these names, important to say, are actually useful at determining price direction. Morning and evening star, especially when you combine them into a full-fledged strategy. But we will share with you what the basics are. Then we'll share with you about leading and lagging indicators. We're looking at moving averages and MACD, the RSI stochastic. Guys, there's quite a lot of indicators here, and we will walk you through Bollinger Band, accelerator, alligator, fractals, gator. A lot of you would not know that there are quite a lot of interesting indicators that if you combine them together, they will significantly improve. Okay, then we look at combination, something I'm actually very excited about, limitation and advantages of indicators. I feel like this is very important for every trader. You would understand what you can use indicators for, all of these indicators, what are the limitations, what are the advantages. Then we'll move into combination of trend and oscillation indicators. Then, guys, we move into chart patterns. We begin to look at double tops and double bottoms, rising and falling wedges, heads and shoulders and inverse heads and shoulders, ascending, descending and symmetrical triangles, bullish and bearish rectangles, triple tops and bottoms, on and on like that. Then, guys, we look at functional resources that we believe will be helpful for you. Okay, we look at the Fibonacci, the types and functionality, the combination with trend lines, combination with support and resistance, with moving average. We look at equidistant channels, multi-time frame analysis, regular and hidden divergences, guys. You really can't miss this. Then, guys, from there we look at professional combinational trading strategies. Guys, in the applied class, we're going to be running strategies for scalping, intraday, swing, and long-term strategies. Strategies we feel will be very useful for you. A lot of our strategies have been back tested and forward tested that can actually help you to be successful. Then we look at fundamental analysis. A lot of traders do not get a proper handle of the fundamentals. We share here about obtaining the macroeconomic view of affecting various instruments. We share useful resources for you. Interest rates and effect, unemployment and unemployment data, CPIs, industrial production reports, retail sales, and gross domestic product. Guys, all of this we and into applied risk management. How do you actually use risk management in an actual trade environment? We look at position sizing and free tools, diversification, free resources, managing winning and losing positions, and utilizing trading stops. This is the content of the applied, and it ends on core notes on trading psychology. All of our classes have been built to end on core notes on trading psychology, how you need to manage yourself with the market. Guys, I'm super excited about the advanced school. Okay, super excited about what we got ready for you over there. We do a quick review of the previous classes. Okay, then we'll get started with the Elliott waves, and we look at the construction, we look at the principles and applications, the fractals in wave construction. How do we reduce intuition and go towards a more quantified, qualitative way of trading with the Elliott waves? Then we look at actual trade setups. Then, guys, we move into one of what a lot of traders have called probably the most interesting and effective, best risk to reward type of patterns, and that's the harmonic patterns. We look at 6 harmonic patterns as you can see here. The ABCD, 3 drive, Gartley, crab, bat, and butterfly setups with actual trade setups. Then we move into advanced trading strategies, and we have 3 advanced trading strategies here for intraday and swing strategies that we believe will be very useful for you, guys. Then we end up with a very high gain multi-time frame zone swing trading strategy. We look at the principles of this strategy. We look at how you map the zone and how you execute. We look at risk management and trade management. Guys, to end this advanced school, we will walk you through the portfolio construction class, which takes you to actual portfolio goal setting, back testing, and forward testing. Essentially, portfolio goal testing is probably one of the concepts and knowledge bases that anybody who has any interest whatsoever in managing portfolio, managing capital beyond just for yourself, you want to actually maybe try out something like a mini hedge fund, you definitely need to be on the class. We look at back testing and forward testing, very useful for the kinds of strategies, because when you set goals, you will need to understand what kinds of strategies will be effective in achieving those goals. We look at optimization. Then we look at factoring average volatility of each pairs that you're trading with. We look at risk diversity, developing a trade plan, then review during the portfolio life cycle, re-optimization during the portfolio life cycle. Then again, we end on trading trading psychology, guys. Super I am super excited for everything that we have mapped out here. Super excited. All of the schools here have actually been designed from the early school, okay, which gets you started, to the applied trading school, and then to the advanced trading school that gets you started. Now, guys, I'm gonna walk you through what the requirements are. These are not free courses, guys. There's so much work that's been put into it, and we absolutely believe that if you want to get value, you have to be willing to commit yourself to the value that you get. The early school, you're gonna get the full cost at $10 or 2,000 naira, guys. $10 or 2,000 naira gets you the early school courses, absolutely full. And if you got questions, you can also mail questions back to us. At the applied school, we give you the full course content of the applied school as is shown on the white paper. We give you free risk management tools, free trading indicators and resources worth $500. The price for this course is $250 or 90,000 naira. We've got a limited discount offer of $80, okay, that you can actually access of 30,000 naira. Remarkable that we are actually giving you because you've taken our time to go through the resources and to join up, and we're just feeling very nice about ourselves at this point in time. So you hurry up and make sure that you get up on that course. It's just $80 for all of the value, guys, that we have shown here. It's a lot of value. I really did wish that I got a course like this when I got started with trading. Okay, and guys, this course is only going to be available between now and the end of this year. From the 1st of January, this course reverts to its original price at $250 or 90,000 naira. So, but for now, you can get this course between now and the end of this year, like end of the year giveaway, a discount for $80 or 30K. Now, the advanced school, guys, super excited. Portfolio managers, advanced traders, if you want to get into this, you want to set up a company around this, you want to do this beyond just for yourself or for your capital, you absolutely need to get here. We're looking at the advanced school. It's got the full course. It's got free signals for 1 month. We don't really believe in sharing signals, but we share these signals so you can see exactly how this can play out in a live market environment. We look at free risk management tools and templates, trading custom indicators, lifetime access to an online trading hub. So guys, we're going to have an online trading hub, interacts with you via Telegram, and you get a lifetime access to that. Okay, and we just continue to share with you a lot of market tips that will get you started. Now we got also a free personal consultation on portfolio structuring and strategy. So guys, if you ever thought about attaining, we're heading into a new year, attaining a particular goal for your portfolio, you ever thought about what is that goal? What do I want to achieve? You're going to get a free personal consultation on how you structure portfolio and strategy. Guys, this course goes for $600 or 216,000 naira. We got a free limited offer that's available on this course till the end of the year, guys. Absolutely amazing. We've got 66.6 thereabout a reduction in price to the end of the year, and this is what you can actually access at $200 only, and that's about 72,000 naira. Guys, I want to believe that if you walk through these courses, okay, from the early school, okay, to the applied campus, to the advanced trading school, there's absolutely no doubt that you will be a successful trader. We make very bold to say this. We have a lot of proof to show for all the things that I said. Our mentorship programs, before actually getting into a full course like this, have been super successful, and it's off of that success that we built this course and got you started with everything that you actually require to be a successful trader. Guys, I really want to appreciate you for your time. Feel free to mail back this. Just feel free to mail back. You will be getting in attachment to this video exactly how you can subscribe for all of these courses and all of the packages that we've got here. I'd like to thank you for your time. Really great hanging with you guys. Really good sharing with you about the markets. Looking forward to all the great things that we could do. Super excited. Thank you for your time, and bye for now.